Welcome back to your boys, the Dividend Diplomats YouTube channel. We're going to talk to you about two stocks today that get run through our screener. And we're going to say, are these dividend stocks to buy right now?
Hit that subscribe button, guys. Make sure to give us all a nice thumbs up. Back on YouTube, back on all the media platforms, guys.
Woo-hoo.
Heading into our next week of putting out content. And we've got two dividend stocks. No shock factor there, guys. Bert's got two stocks he wants to chat about. Are these stocks to buy right now or what? One stock actually took a huge tumble based on the comments they made in their latest earnings release, which is why it's back heavy on Bert's stock watch list.
That's right. So what we're going to do is we're going to just run these through. We're going to see where the metrics put. And we're going to use our fancy Dividend Diplomats dividend stock screener,
Yes.
which focuses on three metrics and a fourth bonus metric. First one is that price earnings ratio less than the S&P 500. Second one, dividend payout ratio less than 60%.
Oof.
Third metric, history of increasing dividends, where we look at the 5-year average dividend growth rate and how many years the stock has increased its dividend. And then that cherry on top, that bonus metric, is the dividend yield.
Yeah. Again, we do love dividend growth and the history because you want that income stream to keep growing by itself year after year after year. That's why we love dividend growth investing, dividend stock investing. Bert, man, I think this might be one of we've probably talked about this stock less than 3 times in the entirety on our channel, on the blog.
Yeah.
So very excited to talk about them today.
Waste Management, ticker symbol WM. It is just a fantastic dividend stock. From a performance standpoint,
Fantastico.
yeah, they're down. They're up 6% this year to date, so pretty a decent 2025. They're down 5% over the last 52 weeks, though. When you bring in that December 2024 into the equation, over the last 5 years, up 82% from a performance standpoint.
Whoa.
Jingy.
So, yeah, I mean this stock trash still gets picked up once a week, and they always say that consumers aren't throwing away less trash right now.
Yeah.
Hopefully, more recyclables, but Waste Management is there to take care of your needs.
And AI can't really replace the trash business. It might replace how
Robotic.
it might replace like the logistics of it. It could even replace possibly drivers if you pull in some driverless cars from there. But people still need to have their trash picked up. They still need to have it disposed of. And that's where waste management thrives.
And that's where I come into play. They call me the garbage man, Bert, the
Yeah,
hurt locker.
that's right. So let's run them through the screener here. Their price close as a 12/4/2025. That price is 214.19. Earnings per share from Seeking Alpha are $7.50. That gives you a price to earnings ratio of 28.5.
Oof, it's too expensive for me from the
Sure.
PE standpoint, but let's see what the payout looks like. Is the dividend safe, guys? The dividend payout ratio, that's where we look at below again 60%. We want to see the safety of them paying a dividend, but not just paying it. Again, we want to see, a little bit of that reassurance that more than likely they can increase the dividend. Right now at $3.30 per year spread over 4 quarters, it's 44%. So I would say it's relatively safe in our perfect range, and there's plenty of room to grow it, Bert.
I would agree. And growing it is what they do. They're almost a dividend aristocrat, increasing it for 21 years. That 5-year growth rate is 8.47%. On top of it, back in February 18th to be exact, they announced a 10% dividend increase, so above that 5-year average.
Oof, you gotta love that, baby.
Yeah. So what's about the
Now, what?
yield? Let's
Yeah,
talk
what's that
dividend
do?
yield, 1.54%. So sure, it's not the highest yielding stock. But when you take that 1.54% and you couple it with a 8 to 9% average dividend growth rate, cha-ching, that checks the little box right there for waste management.
Yeah, the yield just about the S&P 500, grow it a little bit faster than the S&P 500, but they're actually currently over the last year to date year and 5 years lagging behind the S&P 500 now.
Yeah, so look, you said it right at the beginning. They are not a cheap stock. They're right in line with their 5-year average price to earnings ratio of 30. not cheap, great quality company with with an average yield in line with the market and a very strong dividend growth rate. It could be one of those foundational stocks for a portfolio. It's not in our top 5 list, but if you said I just want a solid foundation with waste management, I would very much understand and say kudos to you.
Especially if they're on the doorstep of becoming a dividend aristocrat, guys. But
Yes.
there were 2 stocks here. This next stock is what stock really caught my eye because today, as we're filming December 4th, they released, I believe, I don't know if it was just guidance or earnings today based on their fiscal year. But Bert, what are we talking about on the next stock here?
Kroger, ticker symbol
Oh,
KR. And you are right. Um, they did release earnings this morning. Stocks
oh,
subsequently dropped 4.64%, which is why they popped up on our radar. They trimmed their profit guidance and they're trying to do their best to help the consumers with some affordability issues, with trying to keep it cheap so people can continue to buy groceries and buy their products, sacrificing some of their profits in the short term. Long term, who knows how that kind of a trend is going to hold up.
tell you what, had a covered call at $76 a share. Let's just say I'm looking pretty safe, baby.
That's right. So let's run Kroger through the metrics and see now that they've dropped 4.5% today. Let's see where they ended up. Price is 63.14. Earnings per share of $4.79. That gives you
Oof.
a PE ratio of only 13 for Kroger.
Yeah, looking a lot better at that PE. Again,
Um,
less than half of what waste management is.
Absolutely. What about that payout ratio?
That payout ratio, paying quarterly dividend, but annualized, it's $1.40, 29% on the dividend payout ratio front. So less risk than the waste management, plenty of room to grow the dividend.
Yeah, their 5-year growth rate is 14.53%, and they've increased that dividend for 18 years. I'm looking it up right now to see what is Kroger's last dividend increase. Drum roll, please, as we pull it up on Seeking Alpha. It was a
That was really
9.4%
solid.
dividend increase
Mm,
back in June.
mhm.
Magnificent. Very solid.
Very, very, very solid, guys. Again,
Hmm.
18 years. Pretty impressive there, guys, especially with everything that they've had going on. It's very impressive what they're able to do.
Yeah.
Dividend yield, 2.22% right now. So
Hmm.
above waste management, above the S&P 500. Pretty decent, thankfully, to the pullback.
That's right. So overall, from their now performance, they've dropped so much. Year to date, they're basically flat. They're only up 3%, 52 weeks, up 5%. 5 years, though, they've crushed it over 106%. They have definitely been one of the better performing stocks.
Yeah. So that's Kroger. Now, Bert,
Hmm.
what is your opinion on Kroger right now?
This one's tricky because Kroger has the rare feat landing where they've grown 100% in the last 5 years, but they're not overvalued because not only is their price growing, their earnings are growing proportionately too. So they have a very reasonable price to earnings ratio. I bought it a long time ago. We talked about how I bought it around what we got in what the 20s when we were starting to build this position. Like it's a
Yeah.
tough pill for me to swallow seeing it at 63 to add more to my position, but I'll give you the same answer I gave for waste management. Not for me today, but if you say I want a great company that's looking like a value, Kroger definitely checks that box too.
Yeah, definitely one that I'm going to keep. I've always had on the watch list because I think they operate very well. They're definitely got a pretty good stronghold here in the Midwest. So definitely like Kroger over waste management currently.
Yep, I agree, Sarvion.
Not professional advice. Obviously, do your own research.
You're right. Let us know what you think of these two companies. Are these two dividend stocks to buy right now, or are you going to pass on them like we are? Are you keeping them on your watch list? Throw it down
Yeah.
there in that comment below.
Let us know, guys. Like the video, subscribe to this channel because you're either with us or you're against us. Jack. That was Bert and Lanny from the Dividend Diplomats. Over and out.